and Wednesday was a quiet day in terms of news, but it was a down day for the market. UMBS 5.5 were down 11 basis points early, and the 10-year was down 3. Bonds were moderately weaker to start the overnight session. Some sources cited more easing of COVID restrictions in China as a catalyst, plus holiday mode trading have low volume still in effect. The still cautious mood is dampening the hopes of a rally in the last week of trading after a brutal year for the financial markets. Global equities have lost a fifth of their value, the largest decline since 2008. Times weren't very good then. And the index of global bonds has slumped 16%. The dollar has surged 7%, and the 10-year yield has jumped to above 3.8% from just 1.5% at the end of 2021. Pending home sales fell 4% in November to the lowest level in 20 years. They are down a whopping 38% year over year. Note that sales tend to lag the mortgage market by a couple of months, so sales today represent rates from October and November. Mortgage rates peaked in mid-November and have been falling since. The spring selling season should see a pickup in sales. Geographically, the West has seen the biggest declines. At the end of the day, the MBS were down 22 basis points to put us in at 100.31, which is right in the middle of that very narrowing range where we have a Fibonacci ceiling at 100.758. We have a floor at the 50-day moving average at 100.06, which is narrowing up quite a bit. A lot of support on each of those levels in terms of another Fibonacci line on the floor, and 3 lines being looks like the 100-day moving average and the 25-day moving average as a ceiling. The Wall Street Journal had an interesting article about non-traded single-family REIT funds, which have outperformed their publicly traded counterparts by a lot this year. Blackstone's BREIT fund has reported a net gain of 8.5%, which is really good compared to the numbers we talked about just a second ago. About half of the assets in these private REITs are residential compared to the stock price of Invitation Homes, the single-family rental REIT, which is down 34% so far this year. The outperformance means a lot of fast money into these funds want to ring the register and pull money out. Blackstone has been forced to freeze redemptions, as has Starwood. So this is a very interesting thing, because if these funds are similar to American Homes for Rent or Invitation, which have a heavy exposure to Southern California and Phoenix, which is where iBuyers like Zillow and Redfin have been slammed, the year-end redemptions could mean forced selling of these funds. We also got a post from our sponsor at www.WellThatMakesSense.com. This is one of the last posts from that great book, Persuasion, which is all about setting up the environment to sell before you actually start selling. So this is all about mechanics of persuasion, the causes, the constraints, and the corrective of behavior, and how you can manipulate those to sell more products.